Yeah, so I mean, the one good thing was that the Nifty in Friday's session eclipsed the previous session's high for the first time in 5 sessions. So from a technical parlance, I would love to understand what our technical experts think about it, but that seemed to be a consensus amongst 2 or 3 names which wrote their weekend notes, right, about how important it was, the Friday's trade. So, which was one good thing. And from a support perspective, the 24,500 put strike has seen a heavy build-up. 94.76 lakh contracts on last count. So we know that 25,000 is a bit of a, what do you call it, a resistance, but 24,500 built out to be a very strong support as well based on the options activity. And Puneet will talk more about it, I'm sure, but just wanted to lay that out. As we discussed, I think the higher dividend from the Reserve Bank of India kind of assuages any macro concerns that India may have had, because everything else seems to be in favor. This was the one thing, that how will extra capex happen, considering that the government expanded the defense budget any which ways. So now this dividend kind of takes care of that. And the surprise movers the whole of last week were insurance names. And then you try to look at whether a sector has tailwinds for this to do well. I mean, just look at what HDFC Life has done. It's hit record highs at the end of last week. So we're seeing some of these insurance stocks move really well in trade, and the sector has tailwinds for the short term. So what's working? I mean, people are talking about how, one, that the stocks are seeing the uptick on institutional buying. Retail buying doesn't move insurance stocks the way they have done last week. More teeth to IRDA is the expectation, and which should help in confidence building, because people are, kind of taking a leaf out of what happened with a RERA getting more teeth to how real estate became better, to SEBI getting more teeth to how the capital market space became better. And could the same thing happen to IRDA insurance stocks? And the street is assuming possibility of premiums expanding in general insurance. So guys, be ready to pay more for your car insurances, but it works well for the insurance firms. So certainly a sector to watch. Finally, after a really long period of consolidation, is seeing a breakout move. Could be very interesting stocks to monitor in the very short term. Yeah. And okay, Taman, I think first let's finish the trade thing, because I'm sure you have some levels, then Puneet, and then talk about a really interesting tweet from Sanjeev Bikhchandani. But what are the levels that you figured out?
So, no, a few factors that are on my watch list today. First of all, RBI has given its largest ever dividend to the government of India at close to 2.7 lakh crore rupees. I think this is important. So Morgan Stanley says higher dividend is positive to align the fiscal deficit with the government's fiscal consolidation path. It will also maintain the capex momentum, especially when global external factors pose headwinds to growth and thus revenue. So look out for that. I think BFSI has been sitting it out. Bank Nifty has been sitting it out. Look at these 2 sectors and spaces very closely, whether there could be a rebound there. I would add tech stocks. I would add a Tata Motors, only because if the European overhang had continued, it would have been bad for both of these. But the reversal is good news. So the way the Nasdaq futures has responded after Trump has postponed the 50% tariff, is what he has threatened, to the 9th of July as stocks continue, could be good for IT stocks today, for Tata Motors as well, because those conversations from a JLR perspective become very, very important. In terms of the indices, the Nifty rebounded on May 23rd, breaking a 5-session lower high pattern. As Neeraj mentioned, the index in fact closed above the key 10-day EMA, showing a positive momentum. On the weekly charts, it remains above all key moving averages, indicating an overall positive trend. So support levels to watch are 24,700 and 24,460, which was last week's low. Resistance may emerge around 25,000 and extend to 25,200. Bank Nifty remains above key moving averages. Resistance is 55,450, 55,600, and support at 55,000. So these are some of the key levels to watch out for. But Puneet, with more on what we can expect from the derivative space.
Well, thank you for that. So definitely the key levels you rightly mentioned there, from the recovery from May 22nd to May 23rd lows, that was one of the key ones, one of the key highlights from last week. For today, at least, we also saw just marginal dip in the open interest for Nifty futures as well. For the Bank Nifty, we've been speaking about these levels, about 55,000, and that was briefly broken last week. We've rebounded again roughly about 550 points from those lows, getting close to the 55,500 comfort levels again. In terms of, let's look at, essentially the long short ratio as well as the net short positions. We've seen a mixed bag for the Nifty futures. The FIs have been largely short. 363 crores is what the number was for last week. In terms of index option as well as stock futures, though, the FIs continue to be long. When you look at the PCR ratio as well, that's what was another interesting one. It's hovering around the 1.08 mark, which is a neutral position. What's interesting is the index long, which essentially is how long are FIs in terms of contracts. We were at roughly around 37% at the start of last week. We fell to 32, and again, that will be another key level to watch out for this week as well. When you look at the open interest distribution, and Neeraj did highlight this, at 25,000, that level keeps one of the key ones for the bulls. We've also seen an increased participation from traders at the 24,500 level for the put option contracts, and that's been another key support level essentially for the market as well as for the traders. That is one which is to watch out for. We've also seen some increased interest at 24,800 for the puts, but that's largely been activity which has been moving on a daily basis as well. And finally, in terms of stocks, both on the open interest gainers and the losers side, for the gainers, we've seen some short build up in BSE, and that's also largely built up on the change in expiry days of what NSE could be. So there's a news flow attached to that as well. While some long build-up has been seen in solar industries, really good set of numbers. And insurance, which Neeraj also highlighted for HDFC Life, has also seen some long build-up. Finally, for the open interest losers, seeing just some short covering across FMCG pack. United Spirits, ITC seeing that as well, and some long unwindings in Sun Pharma as well on the back of results as well. We saw that news flow come in. Weaker set of numbers essentially in this particular quarter. But overall, we are setting up again for a week with the 25,000 level on the Nifty would be something to watch out for going forward.